to getting to know you all better. First, I'm going to do that really annoying thing that sometimes people standing on stage do, which is quiz you incessantly for a little while. So can I see a show of hands for how many people work in the finance industry? Okay, that was helpful for me. And then secondly, consultants, so basically everybody else, and anything that's not one of the above things I just mentioned. Okay, so like that back corner of the room is basically the usurpers that are not finance or consultants.
Just interested members of the general public.
AKA the Peanuts Gallery, okay. Right, okay, so thanks Gideon for a great talk. Gideon's one of the good guys. I've known Gideon for a very long time. I think we first met in 2014 or something. I wanted to talk a little bit about why this subject is so confusing. Let's see if this clicker works. Oh, I've got a shiny new... yeah, there we go. There we go. So blockchain overview. Who am I and how did I get into this space? So it says I started looking at this stuff at Cytodesk in 2014. What I was actually doing in 2014 was I was one of the founders of the Barclays Accelerator program. This is helping small startups get a leg up into Barclays, effectively. And whilst I was there, I was kind of January 2014, there was the first ever Ethereum meetup in London. And this is where I met two very interesting people. I met a chap by the name of Preston Byrne, which if you've ever had the pleasure or misfortune, whichever way you look at it, was an absolute experience. And I also met the wonderful Richard Brown for the first time. And Richard Brown, as many of you know, is now the CTO of R3, and he is my shaman, my guru in this space, and arguably the clearest thinker in all things blockchain. If you haven't read his blog, gendel.me, it is the Bible in this space, without question. So basically, I'm just like a bearded tribute act to Richard Brown at this point. And because of that, Barclays decided to make me full-time on blockchain in October of 2014. And during that time, I went around all the different team meetings in Barclays and identified at least 60 use cases within a couple of weeks. And unbelievably, we were able to get experiments. We were able to get working proof of concepts of those built. We got about 20 of them built in 6 months. And most of that was startups doing it just to impress us, which is a fantastic trick that I recommend you all repeat, although a lot of them are getting wise to that now. And then the key thing was many of them developed into pilots. So we have Shona Tatchell in the front audience, in front of the second row here, who was involved in the Barclays Wave Trade Finance pilot. And the key there was getting out of, as I think one of the questions earlier, getting out of this blockchain is interesting, blockchain's about press releases, it's all PR, and actually moving real money with real clients. And they did that last year, so congratulations, Shona. So I was a founder of the R3 consortium, sorry about that IBM, and sat on the steerco for many months and helped get that set up. And now I'm leading white papers for CCPs and advising several others on production pilots and so on. This slide is more for me than for you guys. It's a bit of an eye chart, and I'm going to go back to my phone, which I stuck in my pocket because I don't actually like this presentation anymore, and I should have updated it more. But that said, this is the one key thing that I argue with Gideon about, I argue with David about it. Anybody who cares about this space is going to argue about terminology for you. They're just going to get really annoyed at you because you can't find a framework that's going to please everybody. There's blockchains that are useless to other people, great for other people, and everybody has their own perspective. Technical people want one thing, and business people want another thing, and there's a lot lost in translation. And for those of you that have been in finance for a few years, there's absolutely nothing new about that. We're just seeing it in this space. So I like Richard Brown's continuum here of centralized versus decentralized, because there are different points along this continuum, and there are different opportunities. So the more decentralized you get, the more, typically the higher cost your blockchain is, typically the less the regulators like it, typically more anonymity is involved, but I note I use the word typically because there are exceptions to every rule, and you'll find Zcash, Ethereum, Bitcoin, and other projects like it, Monero and many others, in that kind of sector. And that's the kind of stuff that scares the regulators, but also where the genuine innovation is really coming from. Claire Christensen talks about disruptive innovation coming in at the bottom of the market and serving people that were not needed, not necessarily changing the top of the market. I often say that Citibank didn't miss the internet revolution, they just didn't benefit quite the same as Netflix. And it's the new business models that really excite me about blockchain and distributed ledger, whatever you want to call it. It's the new business models that really speak to this problem number one. So problem number one is greenfield versus brownfield. Okay, and that's not on the slide. It's just they like having slides up. Now I'm going off my own. Like, I'm going crazy. Greenfield versus brownfield, as it sounds really, if you are a legacy institution with lots of legacy equipment, you have the problem of all of your existing processes, all of your existing staff, all of your existing IT working in the way it does, which is typically highly centralized, typically high fixed costs. And you have to somehow convert this to this new world of decentralization. So it shouldn't surprise us that what they're doing is moving towards centralization quite a lot. So Corda and Hyperledger, in their current form, actually look almost nothing like Bitcoin. They've even started using the term blockchain inspired because they almost don't fit into the definition of a blockchain anymore. It's kind of like the difference between vehicle and car. Everybody's calling these things that fly, they're calling them cars. The things out there on the river, that's a car in this space at the moment. And it's not a car, it's car. Because blockchain is to be used as this singular thing. That is car, car, car. We've got this weird language thing going on in blockchain. So when technical people get annoyed at you for using these terms, it's not them, it's you. Sorry. So we've got this really weird language thing going on at the moment. And I think this continuum has a lot to do with it. Now, if we abstract all of that, if we say, what's the vehicle trying to do? Instead of Gideon's blockchain, instead of IBM's blockchain, instead of R3's blockchain, let's just step back and say, what's this concept of a shared ledger? Because this, to me, is Richard Brown's kind of beautiful mind moment. He said the idea that we really need to change in the world today, for a number of reasons, is the fact that there is no good way for databases that sit in multiple organizations that have to have multiple different jurisdictions or dominions of control, that have to have those for business reasons, to easily reconcile. Now, if they're in the same dominion of control, if they're in the same business framework, the same regulatory framework, you just centralize it. And financial services has been doing that forever. You've got Visa, you've got MasterCard, you've got countless exchanges, you've got CSDs and CCPs. Centralizing has worked really well in financial services, to a point. Because centralization does stuff that you can rely on somebody else to do, but it doesn't do the stuff that you want to keep in-house. So banks want to have a lot of competitive advantage. The buy side wants to have a lot of competitive advantage, but they also want to have low fixed cost, and they want to have low operating costs. And having those both has always been really difficult. So there's a term that John Matonis hates that I quite like, which is for the brownfield space, for the incumbent institutions, the shared ledger is a revolution in reconciliation. And Gideon even alluded to that, is this idea that instead of doing what I do today, so let's say we're in financial markets or trade finance, financial markets, let's say. I'm at a bank and I'm going to sell some interest rate swaps, or I'm going to sell, I don't know, a product to a hedge fund. I'm going to sell it to a pension fund. So I go about inside my bank and I'm putting my contract together and I go to my risk team and my risk team say, yeah, you can do this because this pension fund is legit and we've got all the sign-off we need. And I go to my credit team and they say, yes, we've got enough credit for that. And I go to compliance and they say, yeah, you're okay, and legal sign off my contract. And I might even have a really nice automated workflow for that. Chances are I don't, but let's imagine I did. There are some banks and there are some institutions that have a really nice internal workflow to do all of their processes. So let's imagine I've got all the way to the point at which I'm going to do a deal with my client. What do? I've got this nice automated workflow. I've got everything I need to build my contract, and I create a PDF and email it to the client. In 2017. That doesn't necessarily do straight-through process quite so well. And as soon as we're in email, then somebody's got the wrong version of the email, somebody's lost the email, the client disagrees what the version of the email they actually signed was, somebody signs the back page of something and sends you a scan of the back page. And this is billion-dollar deals we're talking about. This is not child's play. So a straight-through process in financial markets would be incredible. But how do you orchestrate a straight-through process amongst competitors? Easy. You just centralize everything, right? Not so much. Because if I'm centralizing the books and records, if I'm centralizing the balances into one entity, I've just created the biggest entity in the known universe. Talk about too big to fail. I've now just created the one thing that can never, ever fail. So I can't do that. I can't centralize in this market. So I just standardize, right? I just have an API and everybody adopts that API. Well, actually, that'd work really well. We should be doing a lot more of that stuff. And that's probably 80% of the battle, is better standardization, better governance, and better use of existing technology. But this ability to know what's inside somebody else's database, this ability to know that our records match, even though we've sent instructions to each other, to know that what we're actually using as our books and records match, because we can't have the same one, we can't trust somebody in the middle to do it, because I don't want to create the biggest entity in the world. That is a revolution. And that's what's got financial markets excited. But they're not using Bitcoin for that. They're not using Bitcoin for that for a number of reasons. Bitcoin has a series of problems. It can't do confidentiality, as Gideon said. And indeed, the blockchain purists build blockchains that struggle to do confidentiality. So if we go back to my continuum, it's no surprise then that if we look at the bottom left, you see Corda and Hyperledger Fabric and Hyperledger Sawtooth Lake and all of the other things in Hyperledger. They're all moving towards solving that confidentiality issue, but at what expense? So I've often thought that people, whilst there's two things happening in the market, there are people really starting to get to production with some interesting blockchain projects. But at the same time, pretty much every technical person I talk to will tell you that none of this stuff that's being used in enterprise is fit for purpose. It's not baked yet. And it might be by the end of the show, or there are smaller projects like multi-chain that work for what they're meant to do, but there isn't a one vendor solves everything solution yet. There isn't a one code base solves everything solution yet. And this is a really interesting problem in the market because, of course, when you go talk to senior executives, they say, okay, I'm starting to get this blockchain thing. There's something about diamonds and this Leanne Kemp lady, and I've got that use case now, and I get that I can do my trade finance without paper. What do I buy? And then somebody comes along and says, I can do it all for you end to end. But because we're sort of not ready for that yet, we're getting a lot of confusion in the market, and we're getting a lot of challenges in the market. So I'm going to give you some examples of things I wrote down a moment ago, which I've now forgotten. So let's have a look at this one. So some greenfield ones to contrast against the brownfield. So the greenfield one I like is the idea of a private share registry. So some of you might have heard of NASDAQ Link. Some of you might have heard of Symbiont and the work they're doing with Delaware. Some of you may have heard of a company called Autonomous. So this is really interesting to me. This idea that registering shares today is kind of a very manual process. If I'm building a startup, which I have done recently, and that company is got 5 co-founders, 2 co-founders, we meet somewhere, we loosely agree a deal, and if we're smart, we might sign some paperwork. About 50% of companies don't sign any paperwork. And then let's say we're really, really lucky. Let's say it's become successful. Well, then we've got to get professional investors involved. And professional investors want to see the articles of association, and they want to see company due diligence, and they want to see accounts and records. And if there aren't any of those, then you start getting into a lot of problems. Now, if I had a simple online platform that I could log in and create my company on, that would be nice. And that would be something that a government could offer quite easily, and there'd be no reason why I wouldn't do that on a centralized government database, unless, of course, I want to give other people access and control over that company in the same platform. This is where it gets interesting. So the problem that we have today is that a lot of times when people get to the point where they're bringing in professional investors, there'll be one of the co-founders of that company that has to do the conversation with the investors. And there have been numerous occasions where startups haven't got past their Series A round. I saw this in the Barclays Accelerator quite often. Kills more companies than you'd imagine. That one of the guys says, I've got 60%, and the other lady only has 40%. Or the CEO says, I've actually got 70%, and the other person's only got 30%. They negotiate up their position versus everybody else. It's sad, but it's true. Now, there's no paperwork to rely on. There was only ever a handshake agreement in 2017. Now, if we create something that was immutable, and something that had signatures over the top, not paper signatures, not Sergio Aguero's signature as Div would do, or pick your favorite celebrity here, which is a great way to spoof signatures. Just if you sign it with your favorite celebrity, then you know it's you. Otherwise, you've no way of knowing. Hat tip to Div for that. Instead of signing it that way, I sign it with my device, I sign it with my fingerprint, I sign it with something identifiable to me. And then, because I have something that's immutable and has an element of consensus under it, The only way in which that record could be changed mathematically is if those same people sign the same thing again. So what I'm saying is that the co-founder number 1 could never trick co-founder number 2. The situation would be removed. Both people who have controlling interests in that company would have to sign that document for it to move forward. Now, let's say these articles of association, this cap table, is now stored as something like a smart contract, something that is stored on a blockchain, but is also a contract that is digitalized. Then we get into some really interesting territory. Now I have a private share registry. Now I have private security issuance sitting in an entirely new blockchain. So this is kind of what Barry Silbert was trying to do with Second Market. Do anyone remember secondmarket.com? Pretty interesting little company. They were trying to, the problem with it was people were trying to dump insider shares when they had information about a company that was about to go public. The great thing about something that sits either in a public blockchain or in a blockchain that has a lot of participants in it is you create a level of, new level of more transparency, not entire transparency, but more transparency that allows you to have this network of new things happening. So if I'm looking for investment, I'm now on a platform where investors can see my cap table, where I can have more investors perform due diligence at me at lower cost. I don't know if any of you have ever been on the VC side, but VCs absolutely hate the investing process because going and looking at a company based out of Switzerland and then trying to understand their laws and their contracts, but then also having to do due diligence on one in France in the same week or one somewhere else in the world, it's impossible and paper-laden and really, really difficult. So VCs absolutely love this idea. Now, what's happened is some of these companies are integrating directly with Delaware, for example, which is where most US companies are incorporated. Delaware has actually issued an edict saying that all companies incorporated in Delaware by, I think, 2020 or 2021, I don't know if they're firm on the date, will have to be issued on a blockchain because they are so sick of the cost, they are so sick of the legal issues and the cost from tax receipts, lack of tax receipts that they're getting from all of this destruction that comes with not having a clear record of cap table, that they've said, we want this capability. But once that capability is there, then you've effectively got an entire new asset class. You've got a new thing that we can trade that we could never trade before. This is where the opportunity comes in, and this is what everybody's missing, in my opinion, is the greenfield side. So last but not least, I'm going to talk a little bit about a thing I call the narrow focus. So going back to my continuum here, well, not my continuum, Richard's continuum, but one I've replicated. Each project is trying to solve this much of a problem. Bitcoin was trying to solve the problem that central banks exist. So they created Bitcoin. Ethereum was trying to solve the problem that there is no world computer. So they created a world computer. If that's not the problem you're trying to solve, chances are those tools are not the tools you need to use. But what we've also seen is that Hyperledger, I think, are now trying to be somebody that can work for large corporates that want to have some sort of shared record of facts in any industry. So they've built a set of tools that solve those needs. Corda is more specific. It is specifically looking at financial services, capital markets, people that want to trade contracts between each other and have straight-through processes. It's really, really narrow. So it's not surprising then that there is no one solution to rule them all. There's no one tool to rule them all. This means you need to consider complementary technologies in any blockchain space, in any blockchain project. It's not surprising that I'm standing up here telling you it's a bit more complicated than the advertising suggests, but it is a bit more complicated than the advertising suggests. And it's worth getting to know what's really going on in this space because then you can identify actual opportunities. You can identify what you need to do. Because why do the pointless blockchain project? Why do the thing everybody else has done? Or why use a tool that isn't fit for purpose? Do the thing that works. And the way you'll find the thing that works is by understanding where Corda works, where it does not work. Where Hyperledger works, where it does not work. Where multi-chain works and where it doesn't work. Because these multi-chain will be the right answer for a lot of problems. But Gideon will tell you it's not the answer for everything. In fact, I think he did a pretty good job of saying it's not the answer for this stuff. And I like that intellectual honesty. So if I can leave you with a couple of messages, I'm going to check my phone to remind me what they were. That was it. I came prepared, but it was just on the phone. Look past the proof of concept. Look past the headlines. I look at things that going on regionally. I look at things that are, especially out of Tel Aviv, Kedit, Multichain, super interesting companies. I look at things, Northern Trust put out a press release, and nobody seemed to notice this, but Northern Trust are actually live on Hyperledger with a real product right now. Don't look at what Goldman are doing, or JP, and who's in R3 and who isn't. That's all theater. Innovation theater is not interesting. What's interesting is what can you use, what's going to make a real difference to your top and bottom line, and what's actually going to make a difference for clients and customers. And by doing the research, by attending events like this, and by hopefully networking with all the people you are in here, you've got something to really kind of work with. I'm just going to skip past this. I think a lot of people are assuming, I think we're getting better on this, but people still treat the subject of DLT like it's Bitcoin. And everyone's guilty of this. There was a question about what happens in a 51% attack. Round-robin consensus doesn't have the issue of a 51% attack because the consensus issue is different, the mechanism is different. There are at least 14 different consensus mechanisms that I've seen. There are at least 300 companies I've seen that claim to be a blockchain platform. So there's so much going on here that there's a friend of mine, Bob Ford, who I think Shona will know, who says, have you ever had a zit on your face? As the closer you get to the mirror, the bigger it appears to you. This subject is definitely one of those. But it's not too complicated to get, because in chaos, it turns out the best thing you can do isn't to look for a map, it's to just start moving and figure out where you're going. So if I'd encourage you to do one thing, it's to pick up Ethereum, install it on Visual Studio, pick up Hyperledger with their new project, pick up Multichain and have a go. Or at least work with developers that can have a go. And try a few things and figure out for yourselves where it works and it doesn't. Build your own understanding. Because the C-suite get the hype, but they're always asking, what do I bet on? And it's people in this room that will tell them what they need to bet on. You need to be able to translate that into a business case. Bring control teams and stakeholders with you from the business. And that will make a real difference. Finding and recruiting the right skills will be a challenge for this. There aren't a lot of people with 3-4 years of blockchain on their CV. But there are so many hidden gems in large organizations. There is so much talent out there that absolutely, you should talk to Zeth Kassera. No, this is a cheap plug for Zeth. But absolutely, you are those people. You are the future of this subject. And I hope that's been useful. I hope that's been helpful. That's my talk. Thank you.